Welcome to Money Mondays with Ash Cash. I am excited as always to bring you the knowledge and the financial information that you need. Before we get started, you got 2 minutes. Let's start to share the video. I'm going to share the video, but let's share it with your friends, your family, your significant others. I love saying that. All right, just share the video. I'm going to share it right now, but we're going to start in about a minute and a half as we do or we get ready for Money Mondays with Ash Cash every Monday at 12 p.m. All right, I'm going to share this. All right, tell a friend to tell a friend. You should be sharing this video. I am sharing this video right now. Tune in now. Exclamation point 5 times. Okay, so that's share number 1. I got 3 shares to do, so bear with me for a second. We're talking about 7 ways that we can pay down debt. There is a big epidemic happening right now. There's a lot of debt out here, and so we want to talk about how can we pay down debt. So let's go. Ash Cash is giving. Make sure you share this. Ash Cash is giving you 7 ways to pay down debt. All right. And so I got one more post to share, and then we're gonna get started. Always excited to be with you guys, so I appreciate you. You could be anywhere on the planet Earth, but you're here with me. I appreciate that. All right, share on your own timeline. And we're going to go tune in now. And we're going to post that. All right, so welcome to Money Mondays with Ash Cash, brought to you by Bank Mobile, the financial app that is providing a financially empowering banking experience to 2 million plus customers. And so thank you, as always, for tuning in, whether you're tuning in live or you're tuning in after the fact. I appreciate you. This is my passion. My passion is to financially empower people and to give them the tools and resources needed to take their life to the next level. And so when we look at the statistics, the average household has debt of $134,000+ average. And so that's 300 million people in America, and the average of all of those families are $134,000. That can include credit card debt. That can include student loan debt. There's just so much debt out there. And as I understand, a lot of times when it's time to talk about New Year's resolutions and talk about things that we want to do or fix financially, the first thing that comes to mind is debt. Like, how can we begin to pay down debt? And so because that's always been an issue, I want to start off today I want to give you tips on how can you truly pay down debt. Not, say that you want to do it and for whatever reasons not really fulfill that, but how can you really get to that point where you just be able to pay down your debt? And so I'm going to give you 7 ways that you can pay down debt. And step number 1 in paying down debt is I need you to view debt in the proper light. And what that means is that I know many people who have debt, and as they think about debt, they use debt, pay it off, use debt, pay it off, use debt, pay it off, because they want to satisfy instant gratification. Credit card debt should not be used for everyday expenses, because when you're using credit card debt for everyday expenses, you're actually throwing money away, literally. Your impatience, the patience that you should be having, by not having that, you're literally throwing money away. And so I just need you to look at debt as that. Debt is a way that you're throwing money away, because if we just make a sacrifice, and I don't mean it as if it's going to be easy. For some it's easy, some it might be a little more challenging, but we all have to be able to get to a point where we are not so reliant on debt. And whether that means to cut back on some things, and I'll give you some ways, but we have to just look at debt as what it is. We're throwing money away. And I think the mindset is very important, because once we change the mindset, and once we properly have a good mindset and understand, what we're actually doing by using debt, I think then we will begin to pay off the debt that needs to be paid off, right? Because there is good debt, there's bad debt. And, just to kind of keep it simple, good debt is any debt that can help you or any debt that can allow you to gain an asset. And so when you think about student loans, on average, those who have college degrees are able to make more money. And so we look at that and say, okay, student loan is a good debt. When we look at a business loan, someone who takes out a business loan and something, money to start a business, that's a good debt, because they're going to increase their income. Someone who takes out a mortgage, that's good debt, right? Because at the end of the day, the house is more likely than not going to appreciate. We saw in 2008 that wasn't necessarily the case, but for the most part, it's going to appreciate. So when we look at good debt versus bad debt, it's really important to know that I'm talking about bad debt. I'm talking about the debt that does nothing for you, the debt where if you buy something on your credit card and you're getting charged 10%, 12%, 30%, whatever you're getting charged, that extra percentage that you're paying on a monthly basis is money you're literally throwing down a drain. So you can literally take your cash, put it in a toilet, and flush it. That's what you're doing when you're using credit cards. And so if it's an emergency purpose, then that's different. But again, step number one to paying down your debt is to really just put it in its proper perspective and make a commitment and say, you know what, I'm not going to throw my money down a drain anymore. I work hard for my money. I enjoy what I'm doing, but I still have to put in the work in order to make this money. And so when you put your debt in the proper light, that's going to help you. Number two, I need you to prioritize your budget. And so budgets are important because budgets are your roadmap, right? It tells you exactly, where your money should go. And so in order for you to get rid of debt, you have to tell your money, listen, I'm going to, first you got to pay yourself first regardless, right? You got to pay yourself first because as you pay yourself first, that is going to help you with debt. And people say, how is saving going to help me with debt? The reason why saving is going to help you with debt is because when you don't have money saved, you believe, hey, you know what? I need extra money. I need this money. I'm using somebody else's money. And so I'm going to take on this debt. But when you have savings, it either gives you two options. It says, hey, I actually have money, so if I'm going to buy this thing, I don't have to pay extra for it. I can actually pay for it. And two, because it's your money, even though credit is your money in a sense as well, because you're borrowing money but got to pay it back, but because it's the fact that it isn't originally yours, you kind of feel like you don't have as much of an attachment to it than you have with savings. And so if you have money saved up, I don't know, psychologically it works where you say, I got money saved up, I have credit, I'm not going to use credit before I use savings. And you know what? I saved this money, so do I really need this thing? And so, in my experience, prioritizing your budget, allowing yourself to pay yourself first, allows you to diminish the amount of debt. And it helps you pay down debt faster because now you are not tempted to use money and pay money on or buy things unnecessarily. And then two, as you have your budget, you now can say, this is the amount of money I can allocate towards the existing debt that I have. I'm not going to use new debt because I have savings, but I'm also the old debt that I have. It allows me to prioritize how much money am I going to be allocating towards paying down this debt. Number three, ask to lower your interest rate. People don't realize that credit card companies it's $1 trillion business, $1 trillion business, but because there's so much competition out there, people are always vying for your business that they know that if they don't meet their customers' demands, they can potentially lose out on their customer. And so if you just simply ask, people don't even realize if you call your credit card company and you say, hey, credit card company, I've been a loyal customer for 5 years. I've been a loyal customer for 3 years, and I've had the same rate for all this time. Can you give me a lower rate? You'll be surprised at how many credit card companies are willing to give you a lower rate because of your loyalty, because they don't want to lose you, because they know that there are credit card companies out there that might offer you a 0%, and they don't want you. They know that if you're asking about rate, if you're rate sensitive, that you may be in that space where you're willing to look for other rates, and so. Just ask, call your credit card company and ask them to lower your interest rate. You'll be surprised that by just asking, they may lower it, which will, in the long run, help save you money, help you pay down your debt faster because you have to pay less. Number 4, in 7 ways to pay down your debt is snowballing your debt. I am a big fan of snowballing your debt. There is 2 types of ways that you can pay down debt. You can do it the mathematical, the mathematical way, which says take your debt that has the highest interest rate and pay that off first, and then once you pay that off, the highest interest rate, then you start moving on to the next. That is a great way. If you have the discipline to pay down your debt, because that allows you to save more money. But again, just in my experience, I've noticed that when people have, let's say you have 5 cards and you have your highest interest rate is the one that has the highest balance, and you try to tackle that one first each month because it has the highest balance. You're trying to tackle that, so and you're still paying the minimums on the other cards. It starts to seem as if you're not doing anything to make a dent, and it kind of makes it feel like you're not penetrating your debt at all. So a lot of people give up. And so when you snowball your debt, which is the opposite, which it says, forget about what the interest rate is. I want you to take the lowest amount of credit you have and put it in order up into the highest amount, so from low to high. And when you do that, you take the low amount and you start to pay off the lowest amounts first until you're left with 1 credit card, and that 1 credit card you now start just tackling, and it's called snowball because the money that you would have paid for the other credit cards, you now take that money and you snowball it. So as you break down the amount of credit cards that you're paying, the money gets bigger, right? So you are allocating a little amount to all of these different cards. As you get rid of one, you now take that money and snowballs into a bigger amount, and to pay off the next one, and snowballs into a bigger amount and pay off the next one and the next one and the next one. And you do that, you'll realize that it is an effective way to get down to business, to get down to a space where you're not juggling 5 or 6 credit cards. You have that one with that big balance, and you're attacking it. You're snowballing. You're attacking every month. Number 5, make more money to pay off your debt. Because as you are paying off this debt, and it's taking a long time to do so, the longer it takes for you to pay down your debt, the more money that you're giving out, the more money that you're literally flushing down a toilet. And so get a side hustle, get a second job, do something that's going to allow you to make more money, so that way you can pay off debt. Because once you pay off that debt, the money now that you used to be allocating towards debt, you can now add more money to your savings, add more money to your investment, add more money to retirement, add more money to just being financially free, adding money so that you are able to live the life that you want to live. Number 6, temporarily cut expenses. So if you get an extra job or another job, a side hustle, you make more money. That's another way. But then also, as you start to cut back on expenses, you are actually saving more money. You are now retaining more money, and that money can be saved, but then it also can be used to tackle down your debt. We want you to get to 0 debt. We want you to only have good debt. We don't want you to have bad debt. We don't want you to have credit card debt, personal loans, car loans, any of those type of debts that are bad debt. I need you to cut back on your expenses temporarily, right? I'm not saying to do it forever, but temporarily cut down your expenses so that way you could tackle on your debt, and that way you get to a point where you're a little more free. Lastly, cash in rewards points. A lot of your credit cards may have rewards points, and so it might be a great thing for you to say, "Hey, I got 10,000 rewards points. I can get an iPhone case or something, right?" But what if you could just cash those in and then start paying down your bills that way? And so, there's definitely a way for you to cash in your rewards points and to use that to pay down your debt. So as a recap, these are 7 ways to pay down your debt. Number one, I need you to get your mind right. I need you to view debt in the right light. Understand that debt is not your friend. It's a frenemy, right? It's your friend. It's your enemy acting like a friend, right? Credit card debt makes it seem like, hey, I got you. You need something? Hey, why not? I got you. It's your frenemy, right? So put it in the proper light. It is hurting you. It is not helping you. Credit or bad debt is hurting you. So view it in the right light. Number two, prioritize your budget. Pay yourself first and allocate an amount for debt. Number three, ask for a lower interest rate. Credit card companies will be willing to lower your interest rate. So make sure that you at least ask them. Number four, snowball your debt. Take your debt and take it from the lowest to the highest and prioritize to just pay the minimums on each and then snowball and get rid of one, then get rid of two, get rid of three. Number five, make more money to pay off your debt, which means, talk about side hustles. 2 weeks ago, we did an episode on activating your side hustles. So, check that one out. But create a side hustle. Figure out a way that you can make more money. Number six, temporarily cut your expenses because as you cut your expenses, you now have more money that you can allocate to savings and paying down debt. And then lastly, cash in your rewards points. All right, so that's all I got for today. Quick reminder, last week we did talk about how we do have a campaign that we partnered with World of Money with. Make sure that you are hashtagging bank number 4 good, so you can tell us how we are helping you become financially free. How is financial education helping you become financially free? So make sure that you use that hashtag bank number 4 good on Instagram, Twitter, Facebook. Also, as you open up a Bank Mobile Bold account, so I got my Vibe t-shirt on today, so fat shout out to my Vibe crew, and this is the college account. But if you open up a Bank Mobile Bold account, you are able to get $10, and $10 goes to World of Money. But definitely make sure you check out that campaign that we got going on. All right, so I'm going to open it up. Do we have any questions?
Trey Truck asks, what kind of debt should be paid off first?
All right, so fat shout out to Trey Truck. So what kind of debt should we pay down first? I believe that you should pay down first credit card debt, and then when you start there's 3 types of debt that I don't like: credit card debt, personal loans, and car debt. Right. So if you're financing a car, I'm not really a fan of that because cars depreciate. And so I first say tackle your credit card debt. Because your credit card debt is most likely the most expensive. When you think about your personal loans, hopefully a lot of banks don't offer them anymore, but if you still have them, hopefully they're at a lower rate. And your car, because it's a secured loan, it's secured against the car, it's usually a lower rate. So I want you to tackle your credit card debt first because that's the one that it might be damaging you the most. And when you think about from a credit perspective, 35, 30, 15, 10, 10, the 5 categories as it relates to your credit is 35% of your payment history, 30% is your usage ratio. Credit card debt affects your usage ratio, so it's actually having the biggest impact on your credit score. So I want you to tackle credit first, and I want you to take the lowest amount, so you take all of the credit card debt that you have, put it in order from the lowest balance to the highest balance, and start paying off the lowest balance first. And then as you do that, you then get to a point where you get rid of all of your credit card debt. Then I would move to your personal loans. Then I would move to your car until you have no debt, just good debt, which is business loans, student loans, and mortgages. And you could continue to pay those down as well. But I want you to get rid of the bad debt first. I appreciate the question. And so I am a big fan of saying that 10% of your income should go to debt repayment. So whatever the amount of money that you're making, that 10% should go to debt repayment. But one size doesn't fit all. And so if you are paying off debt, the amount that should be allocated towards that could be 10%, or it should be based on a realistic budget. When you sit down and you prioritize your budget and you look at the things that you have to pay, you have to make sure that first you have a place to live, and that you you can eat, you can travel to get to where you have to go to make money. And so, it may be 10%, it may be 5%, it may be 20%. You can afford 20% or 30%. So I really think it's really individually based on what you could do based on your budget. So I would say just take a look at your budget. 10% is a great place to start, and you can add or take away based on that. But I would definitely start there. All right, I appreciate the questions. Normash, Trade Truck, thank you for everybody that tuned in. I appreciate you. So I am Ash Cash. Make sure that you follow us on all social media at Bank Mobile. Definitely, tune in, tell a friend, share this video, right? Share this video with your friends and your family. Even if you're not watching this live, share the video. But tune in next week, same time, same place. I am Ash Cash, and I'll see you next time. Peace.